Ben, welcome to the show today.
Thank you, Michael. I appreciate being on here. What a pleasure to be on your show. Really appreciate it. Looking forward to creating a lot of value for your audience.
Well, you've built an enormous real estate portfolio. You've been doing this for a little while, and I want to get into all of that. But I want to know what happened when because you got started when you're early, like in your early 20s.
hmm
What propelled you to get into real estate?
Well, Michael, what was intriguing, I come from Chicago, and I am a Chicago man who's very proud to be from there, from the Midwest. And what I saw to build wealth was through hard assets. And I said, what do wealthy families like the Pritzkers and the Crowns and the Sam Zells of the world, what do they do to build wealth? And what they did is they buy hard assets like commercial real estate. So it's been tested through time of what exactly families have done to create wealth and generational wealth. So I said, that's what I want to do. So I did some research and studied and looked at what type of commercial real estate I want to get involved in. I got involved in office industrial, then we got involved in retail, then we became leaders in medical office, and now we also have a division that does multifamily. So with that being said, I realized that commercial real estate was the area that I needed to be in to build wealth. And that's what got me into it. So my first deal, I bought a 95,000 square foot industrial building, turned it around, sold it within about 4 years, and 3x our money for our investors. And that's what launched me. And then I've been rolling ever since: syndications, funds, development, et cetera.
Now, most people want to get in real estate. They don't get into 100,000 square foot industrial. Like what do they do? Well, a lot of them just they dream about it, but then the other ones, they'll buy a rental or short-term rental, or they'll do the BRRRR method, right?
Mhm.
And what is it? Why did you skip that step?
Because I felt that I had to be a principal. I felt that if I'm the landlord and I control my own destiny, that's how I'm going to build wealth. Like I could have gotten to brokerage, which I suggest a lot of people do to get on the learning curve and to do a lot of transactions. That's why I advise a younger person, because my road was a lot tougher. When you're a principal, you got to raise money, you got to do deals. It's hard to make an income. You really got to grind to get to a certain point like I'm at. And it's not for the faint of heart, Michael. And so for me, I realized that this was my path. I'm not saying it was easy. I'm not saying I recommend it to anyone, but I do recommend is for anyone out there listening is whatever your niche is in life, focus on a niche, go for it, and stay focused and stick with it. And a lot of people won't stick with it. And so for me, I stuck with it. I started developing my craft in certain niches, and then I started broadening it out as I became more successful again to other asset classes.
Yeah. So in your mind, you studied wealth building, right? And most people don't. They study real estate, and then they
Yes.
come to the conclusion that buying a rental will make them wealthy. And you studied wealthy people, and you did not notice them flipping or having rental properties. And so you said, "Hey, all these wealthy people, they built their wealth with commercial real estate." And I think that's a huge insight. Anybody listening and watching this right now is if you want to build wealth, don't flip houses. I mean, don't rent, do rentals. It's going to take a enormously long time. And most people listening to this, Ben, would probably agree to that. But they're going to say, well, you just mentioned it's not for the faint of heart. You got to raise capital, right?
Mhm.
If you want to get into that space, the biggest objection that I hear is, oh, I don't have the money. Now, you were what, 23 or whatever, early 20s.
Mhm.
Did you have that bunch of money, or get, how did you even get to wrap your mind around getting the money? And how did you actually get that money for that industrial?
Well, what I did was I went out to friends and family and folks and at the health club, and I had no fear. I just started asking people and say, "Hey, here's the opportunity." I had modeled numbers. I put together a package, and it was all shoe leather. It was just a lot of hard work and grinding, and I did 7 days a week, whatever it took, Michael.
And that's the thing. It is a grind. Now, I'm sure in the beginning you probably didn't know what the heck you were doing, and you were probably a little afraid of it. A
Mhm.
lot of people think that raising money is about they have to develop salesmanship or manipulation techniques or begging people. Now that you know, when you figured out how to raise capital, what is raising capital really like? Like in the real world, the kind that actually works.
Well, raising capital is a lot of homework and due diligence on finding the right product that will attract capital, and then creating a track record that would be attractive and offering great returns. And so for us is a lot easier because we have a long-term track record. But when I first started, it's really about giving away a lot of the deal to the investor community and then getting them in, improving yourself, and then you could start expanding your equity position in these deals, which is what we've done.
So interesting. So in the beginning, in order to induce investors, you made the returns extraordinarily high for them.
Yes, exactly. You make it high, you make it attractive. You're just starting out. You give away the store. I say, maybe you're giving away 80 or 75% of the deal, whatever it may be, with certain structures. Maybe you're giving a high preferred return on top of that, like we did. And what that ends up happening, Michael, is ends up putting you in a situation where you can bring in the capital attracted. And so when you act with integrity and you show good numbers and you have a good team around you to build, it provides a lot of success.
Now let's talk about that team here a second, because you said it helps to have track record. In the early days, you don't obviously, well, at 23, you didn't have a track record, right? So you said you induce investors by giving them maybe a higher preferred return, inducing them to take a chance on you. But you also mentioned the team. Now, again, I flipped 3 dozen houses, and there was this idea of a team wasn't even there. I mean, flipping houses to me is a lone wolf sport. Syndication, on the other hand, is completely the opposite. Now, talk about how the world of syndication and commercial real estate is a totally different game, specifically around team and, of course, raising money. But the team, why is that team so important if you try to do bigger real estate?
Well, it's important because you got to leverage into other people's talents, and you really need a team to build in order to scale, to be able to start buying assets, because you need someone to handle asset management, property management, acquisitions, dispositions. There's so many aspects of commercial real estate, and you can't do it alone. You only have so much time, so you got to focus. It's like a niche. You got to focus on your niche, and that's why I always say.
Yeah, it's like the book 10x is easier than 2x by Ben Hardy and Dan Sullivan, right? You're talking about when you're trying to 10x something. Let's say
Mhm,
I'm flipping 5 houses a year. And
mhm,
then you try to 10x it and you're like, oh, I can't figure it out. Like you got to do something different. It's completely different. And
mhm,
like comparing, I mean, again, people are always comparing it to single family house investing, right? 10
mhm,
rentals versus one 10-unit apartment building. Or
mhm,
or let's get more extreme. One rental to buy and one 10-unit apartment building. What's
mhm.
actually harder in the world of in a syndication? What would you argue? Is it harder to buy a 10-unit than a single family rental?
No, I mean it depends on what your focus is and how much energy you're going to put into it. You could buy a 10-unit building compared to it. It just depends on how you're going to structure it. You need someone to help you with the loan. It's all about the variables, Michael, because for example, if you're going to buy a 10 or 12 unit building compared to a single family home, you're going to say, okay, I might have to syndicate and bring in equity. That's a change. I might have to do different types of inspections and leverage into other talent. It's all about the effort and what you're willing to do. But if you could bring in the experience to help you, you could do that deal.
And that's the thing. That's what I found is you bring in the experience that you didn't really need when you're buying a rental. Now you got to bring, well, gosh, SEC law. Well, I'm not going to learn SEC law. Well, I got to bring an SEC attorney. I didn't need that person for the rental.
Right.
And then we have the whole property management thing, which we can talk about. Right? For rental, most people self-manage. Versus
Yeah.
commercial real estate, you're just probably going to put a professional management in it. I think it's actually easier to buy commercial real estate in a syndication with a team than buying a bunch of rentals.
Yeah. I mean, it's all about what your strategy is and what your end game is and what you're trying to do. So I'm not saying either strategy is wrong. I'm saying they have uh, different standards you need to adhere to be able to capitalize a deal and manage it. So it's about really time, where you want to spend your time, and what your interest level is.
Well, now you got track record. It's a lot easier for people to take you seriously. But back in the day, you're 23 years old. You have no track record, and you look probably younger than you do now. How did you get people to take you seriously? How did you get investors to take you seriously? How did you get brokers to take you seriously? How did you get potential team members to take you seriously? How did you do that?
It was a challenge. I mean, I'm not going to sugarcoat it. It's not for the faint of heart. It's a challenge. It's you got to put on the suit, your leather shoes, a tie. You got to play the part. You got to put together a good package, which we did, and it allowed me to build credibility. And I was also a CPA, so for me, it was a little bit easier. But it's work. You got to put in the work and the homework and explain the story to the investors why it's going to work and why they're going to be okay.
You said a couple times you put together a package. Was this a live deal or was this some kind of fictitious deal when you say you put together?
No, it was a live deal. It was a syndication. We put
Okay.
together the industrial building, explained returns, explained capital improvements, what we're going to do, et cetera, and then went out and raised the money.
Oh, that must have been a little stressful. So you actually put this thing on a contract first, and then you went out to get the money.
That's correct.
How did that go?
Well, we've been doing it our whole career, so I think we're pretty good at it by now. But it was always a struggle. I mean, I'm not going to sugarcoat it. It's not easy. Raising equity is a really grind, and you got to just go after it and do it.
So the first deal I found most people is always the hardest, right? Because you don't have that track record, and it is definitely a grind. But now, what happened after that first deal?
Mhm.
What changed after you closed that first deal, if anything?
Um, what changed was we realized how we had to learn how to manage properties and asset management, how to negotiate leases. We started seeing the different variables involved in commercial real estate that we had to master. So
Yeah, you learn a lot of those things. So what are some of the things that you learned as you scaled to, the portfolio, half a billion dollars or more right now? What are some of the things that you learned as you scaled the company? What are your biggest takeaways over the years?
I grew and learned how to deal with people and how to communicate better and how to be a people person and how to really understand human behavior. Those were the skills I really started mastering and understanding.
Are you naturally a people person, or was that something that kind of
I had to grow into it. I mean, I'm very introvert in an extrovert position. And so I had to learn how to do personal development. I had to learn how to communicate better. I had to, have my moments to see how I can improve as a person. So I'm no different than anyone else.
And how did you do that? How did you learn? Because we are in the people business at the end of the day. We think we're in real estate, but really in the people business. How did you improve yourself, develop yourself over the years? What are some of the practices that you
I
did?
Well, I found mentors, started to meditate. I started to become more aware and more emotionally intelligent as I started getting older. And I started working on myself and realized that if I can become the best version of myself, it will impact all our employees and help our business grow tremendously. And so I took it upon myself to say, how do I improve as a person? How do I keep growing?
And how are some of these practices, for example, meditation, things like that? People think it's kind of a frou-frou thing, and obviously you're a successful person. You seem fairly serious to me.
Mhm.
How are the things like those things that don't directly lead to a particular outcome or money? Why are those important to you? Why do they work for you and maybe even others?
Well, because they do end up, Michael, leading to wealth and revenue and impact. It has an insight, it has a hidden latent meaning behind it, where if you work on yourself and you communicate better, communication equals wealth. So if I can improve my communication, I'm going to become more wealthier. And so doing personal development to me was how I want to show up every day. It's doing the work. It's those quiet moments behind the scenes when you're doing the work that no one sees. That's what creates impact and produces revenue in your company, as well as start to build wealth. So it's the little things you do. It's this personal development. It's perfecting your craft. It's becoming an expert will allow you to develop and start generating revenue and building wealth. It's so critical.
Now you look past though over your past career here, and you could sit your younger self. What would you tell your younger self?
I would say work on yourself, keep improving, keep growing as a person, and keep working on yourself.
And so, what is your advice to people listening? What are some of the things if we're not doing it right? You talked about some of the things, but to kind of list the top, whatever, 3, 5 things that you really feel strongly everybody should start adopting.
Well, if you're out there listening, what I suggest is to one, get involved in personal development, get a mentor in your industry of someone that's been there, done that, that you want to model after to learn from. Try to shorten your learning curve. I also believe is build your resources and seek the truth in what other people are saying. Don't feel like you're always right. Understand what people are looking at and why, and build your network and give before you receive. And those are the tricks I think that will help you be successful in any career you have in any industry.
So I'm curious, if you had to start over in the industry and you have no money, okay,
Mm-hmm.
you have your experience, but you would have to start over.
Mm-hmm.
You don't have the network you have now,
Mm-hmm.
and you do have the track record. Let's just start. You don't have the track record. You have the experience, but you don't have any money, and you can't leverage your network.
Right.
How would you go about rebuilding the empire?
Well, what I would do is now it's different because there's technology involved.
Yeah.
So what I would do to build the empire is I would do it like my new book, Hard Assets and Hard Money for Hard Times. I would start building my fortress. I would look at the different capstones and keystones and walls I need to start building. I also would look at and say, well, if I'm starting to build a hard asset empire, besides what we do for a living, who else can I invest in that's an expert? Because Michael, what I say is always invest in smart money. Smart money is people that are experts in what they do. I'm an expert in commercial real estate. That's what I know. I'm not an expert in bonds and stocks and gold and silver and currencies, but I can find the right people to invest with to start building my hard asset empire.
Now, you talk about hard assets. That's also the title of your book, Hard Assets for Hard Times.
Mm-hmm.
Why is that so important to you? What lights you up about that topic?
Well, I wanted to write the book because every day I'm asked to take a look at someone's portfolio or give my feedback on investment or ask about how does someone get into real estate. And I quickly learned that most people don't understand how to build generational wealth, and they don't understand assets, money, and time, specifically time. And these are all tools that can build wealth. And so I felt, well, this is a way that not only can we promote what we do in the company, but it's a way I can create impact and give back. And so the book allows you to build your own hard asset empire. It's visual and actionable, which is what I wanted. And it's a way that after you're done reading the book, Michael, we have courses that bring the book to life. So you get advanced in what you want to do. So we try and make it easy. We try and make it step-by-step process. And it's something I wanted to do. It took me a year to write.
Yeah, that's a major effort. So what are hard assets? Kind of talk about that. What does that mean specifically?
Well, hard assets, basically could be anything like commercial real estate, stocks and bonds. It could be artwork. It just depends on where your focus is. So for me, as you know, like you, it's hard assets when it comes to commercial real estate. So anything tangible is a hard asset. And that's what's built wealth for wealthy families over time. And a lot of it has to do with commercial real estate, which is what I'm a part of.
Yeah, so people should go looking for hard assets. The question is, how do people go about it, doing it, right? So the traditional way to do it is I'm going to save X amount of dollars per month. I'm going to give it to my financial advisor, and he or she can invest it in stocks and bonds. And I hope that I'll have enough money to retire at age 65. And so how does a hard asset path differ from that path?
Say that again. Repeat the question.
Yeah, a lot of people just think they need to save and invest their way to retirement, right? And so they're just saving money and they're putting in stocks and bonds, typically through a financial advisor or some ETFs or mutual funds, and they're hoping to have enough money when they retire at 65. And so I'm just wondering if the hard asset route is any different from that.
Well, I suggest diversifying. I'm not saying only invest in hard assets. I'm saying diversify and invest with smart money. And so I like investing capital in hard assets like commercial real estate because it's been tested over time to build wealth. I'm currently involved with it. I'm an expert in it. But when it comes to stocks and bonds, and our thing is you could take disposable income and cash flow and then diversify into other hard assets. And that's a good strategy for people out there listening.
So commercial real estate, I think is fantastic. Is there particular types of commercial real estate that you like? And it may be market dependent as well. Talk about the different ones you're invested in and maybe throughout the years where, market cycles have kind of taken in and out of certain type of asset classes.
Well, I like medical office. We're a leader in medical office. The human body is never going out of style. We're starting to get into multifamily. I think that's a great asset class. And we like industrial and we like retail. So those are the groups I play in and we love them, but we love medical office. Our Alliance Medical Fund is flourishing. We have about 7 assets in the fund. It's doing very well. And we look forward to acquiring even more assets for it.
Now, it sounds like the medical office space seems to be fairly recession resistant is kind of what you're saying about that. And there's other asset classes that are similar. I think mobile home parks, self-storage, for example. Multifamily also for the most part, except recently, of course, over the last 2.5 years, it's gone through a bit of a recession cycle. Mm-hmm. You said you find a multifamily attractive. There's a lot of people who have obviously pulled back over the last 2.5 years because there was essentially blood in the streets and like, oh, multifamily bad. What is your outlook for that asset class?
Well, my outlook for the asset class is real simple. I look at there's a lot of loans coming due. There's a lot of sponsors that over leveraged or put short-term financing on it. I think there's going to be buying opportunities. That's why we're getting into it. We see that with our talent of our leadership team, we have the ability to step in, raise the capital, capitalize a deal, and manage it because we have a lot of experience inside our team that have done multifamily.
Yeah. So there's going to be some buying opportunities, but the question is, okay, great, there's buying opportunities because no one wants to buy. Everybody's selling. So it's basically just trying to catch a falling knife. Mm-hmm. Or is there something more that you like about the fundamentals of the outlook of multifamily?
I think multifamily is going to bounce back. I think there's great financing opportunities. I think if interest rates lower, it'll be better if the 10-year can kind of stabilize and come down a little bit. So I feel that there's inventory to be absorbed, and I feel that people are always going to need a place to live. And if you buy right in the right areas, I think multifamily is a tremendous opportunity for great cash flow and upside.
Yeah. What are you excited about right now? What's in the future for you?
Well, I'm excited about the book. I'm excited to help people create impact. I'm excited about AI. We've implemented AI about a year and a half ago in the company, and it's really changing what we're doing. And we're doing soft skill development for our people. I'm also excited about my TV show, Ben Reinberg, I Own It. We just filmed second season. It's called Obsessed. The first season was Leverage, and I'm just thrilled to, thrilled to be doing what we're doing.
That's awesome. You got a lot of cool stuff going on. How can people find out more about you?
They can go to my company, Alliance CGC.com, if they want to invest. If they're a credit investor, feel free. We'll show you how to build wealth by investing in what we do. And then if you want to follow me personally, go to benreinberg.com. I'm on all the social media platforms. Gives you the ability to buy the book, take the courses, learn how to build wealth, as well as, watch my show as well.
That's awesome. Yeah, great. Thanks for being here today.
Thank you, Michael. What a pleasure. I really appreciate the time.
Cool. You got a bunch of cool stuff going on, man.
Thank you, man. Really appreciate it.
Yeah, great to have you here on the show. Sorry for the hiccup here coming into it, but I enjoyed it.
No worries.
Yeah, it's awesome. Cool. Well, I will let you get on with your day, man. Have a great weekend.
Okay. Talk to you soon. Thanks, bud.
Bye.
Bye-bye.